So you might have looked at an income statement and seen something called discontinued operations. And you might be wondering, well, what is this? What's discontinued? What does this mean? So discontinued operations are something that is recognized when you have two things take place. So the company eliminates a component of its business. So there's a specific thing that the company does. Maybe they have a very diversified operations where they're doing 5 different things. They're in 5 different markets or 6 different markets. And they decide, you know what, we don't want to be in this particular market anymore. We just want to focus on the other 4, the other 5. And they go ahead and they eliminate part of it. They say, well, we're going to sell it off. And so you're eliminating a component of the business. That's a discontinued operation. It's not going to take place anymore. It's not going to be part of the future. And so you want to go ahead and separate that out from your core operations. But there has to be a second thing. So the company is not going to have any significant involvement, going forward. No significant ongoing involvement. So if the company is just saying, oh well, we're just scaling down a little bit with this one component, but it's still going to be a part of what we're doing. Well, that doesn't count. It has to be basically a clean break with some component of the business. And so let's think about this more. Let's get into an example here. So let's say we've got this ABC Corporation, and ABC they're basically they're diversified in 3 different industries here. They make balloons, they make cars, and they make Russian dolls. And ABC, though, they say, you know what, we've noticed that there's this decline in the auto industry, and we don't think we want to be there anymore. So they decide to sell off this division. But just this division. They're not closing up all the operations at ABC. They're going to keep doing the dolls, keep doing the balloons, but they just decide, we don't want to sell cars anymore. We're done with that. We're going to dispose of this component of our business. So that would be a discontinued operation. They would report that separately as a line item in the financial statement. So when you have the income statement, you're going to have like income from continuing operations toward the bottom of the income statement. Then you're going to have the discontinued operations, and then you're going to have your net income. So basically, it's going to be this separate line item. This cars here, this component is going to be presented separately on the income statement so that people can see, okay, well, this part here is not really going to be a part of the business going forward. So maybe they don't want to factor that in. Maybe investors want to focus more on the continuing operations. That's their discretion. But you're separating out this component that is no longer going to be a part of the business. But wait a minute. So the important thing is that we said that for it to actually be a discontinued operation, it has to be a component of the business. So, well, what does a component really mean? Okay, well, it's something where we can clearly distinguish the cash flows. So this car component here, we can clearly distinguish the cash flows of the car component or division or what have you from the balloons and the dolls. We know how many cars we sold. We know what the cost of the cars was. We can see, okay, we can separate the cash flows. And so we can go ahead and distinguish and break this out from the rest. But let's just assume for a moment, let's assume that we're not talking about the cars. Let's assume that we're talking about the dolls. So with these dolls, let's say that there's different brands of the dolls. Let's say there's Pretty Dolls, and that brand, and then we've got the Sweetie Doll brand, and then we've got to round it out the Cutie Doll brand. So we've got these 3 different brands. And with these brands, maybe we can't distinguish the cash flows. We can't really separate this out and say, okay, which cash flow? Maybe because we just want to get rid of the Cutie brand, but we're going to keep the Pretty and the Sweetie brand. We're just going to get rid of Cutie, but we can't separate out the cash flows. We just say, well, you know what? There's so many common things going on here. It's a common manufacturing process, whatever. We just can't separate this. So then it's not a discontinued operation. So that's not something, because you can't really break it out, and that's what needs to take place ultimately to recognize this in the income statement. So it has to be this kind of clear component of the business that has these cash flows and operations that can be separated from the remaining components or remaining operations within the business. So now this gets into, well, what amount? How do we come up with a number? What is it that ultimately gets recognized when we dispose of this car segment, this car component? What are we going to recognize? Well, we're going to recognize a couple things. And one thing is, if we have disposed of it already, let's say the prior month or where we disposed, so we're going to have a gain or loss when we sell that component, right? The gain or loss on that disposal, that will be, so let's say it was we lost $100. Well, then that $100 would be presented net of tax as part of the discontinued operations. But not just a gain or loss when we actually dispose of that component, but also the results of operations for that component. So this isn't, these 1 and 2 are not the same thing. They're absolutely not the same thing. So results of operations might be that company, or excuse me, that component, maybe they had a profit of $27. That if we could separate them out, their own income statement, right? Present that car division as if it had its own income statement, and it had a profit of $27. That's the result of its operations. We're talking about that the ultimate income or net income of that division. Now, the gain or loss on the disposal, we just say, okay, well, what do we have invested here? What's our basis, and then what do we get for it? So we might have a loss on the disposal, but actually the operations, the income of that thing that we disposed of was maybe positive. So we dispose of a segment that made $27 in profit, but in the process of disposing of it, we have a $100 loss for what we actually sold it for compared to its basis. So these are two separate things, and then these get netted, assuming that both took place, or if just one happened, then just one of them goes. So, for example, we might say that we know the results of the operation are 27, but we haven't actually disposed of it yet. We just planned to dispose of it. It's for sale. So technically, we haven't disposed of the operations yet. We're just going to. So then we'd still present the results of the operations as a discontinued operation, and then when we went and disposed of it in the future, then we would have another discontinued operation for the disposal.